Welcome back, friends, and let me start with another question with respect to the corporate taxation. And I want you all guys to come to this particular page, friends. Chapter ID number and the page number, you can see it on the screen. And let me start with the question reading. Okay, let me read the question. Question ID number 14. The net profits of XYZ Limited for the year after debiting and crediting the following items were rupees 9 lakhs. A. The company had taken on lease an old building for the purpose of locating its business. Due to old age of the building, it was demolished and the new building was put up, which was used for the purpose of XYZ's business from the September of the previous year. The cost of the new building was 10 lakh and was written off as a revenue expenditure. The lessor permitted the company to have an extension of the lease by another 20 years. B. 1 lakh was paid as an annual fee for the technical services to the foreign collaborator under an agreement approved by the government. C. The company collected 3 lakhs from its customer by way of GST 3 years back and it had remitted it to the state government in due course of time. On the levy being challenged in the High Court, the court held the collection as illegal and the state government refunded the amount to the company. D. Land development charges of 1.5 lakhs were paid to the State Industrial Development Corporation on allotment of a commercial plot. E. A criminal case was filed against the director of the company. In his official capacity, the company spent a legal expense of rupees 50,000 defending him in the proceeding. The director was acquitted of the charges at the end. F. The company issued in the year bonus shares to its shareholders and for that purpose fee of rupees 1.5 lakhs were paid to the registrar of companies. These have been written off in the accounts as a revenue expenditure. G. The company paid rupees 70,000 as interest on deposit to some of the non-resident buyers on the advances received from them. No tax at source was deducted on the payments. H. Overdraft interest of rupees 40,000 was paid to the company's bank to enable the company to pay its income tax dues. I. The opening and closing stocks of the year were 90,000 and 1,17,000 respectively and were undervalued by 10% on cost. J. Some investment were held by the company not as a stock in trade, which had to be depreciated by 4.8 lakhs due to directive from the government. K. Sale price of the land held as a stock in trade, rupees 10 lakhs. Agreement for the sale of land is expected on 21st of March and the stamp duty at the rate of 5% is paid by the buyer, rupees 60,000. The balance on the 1st April. 2. The profit and loss account shown separately in the balance sheet was debit of rupees 2 lakhs. The company had the following claims of brought forward from the prior years. Assessment year 12 year back 8 lakhs. That is a business loss relating to, Assessment year 3 years back 4 lakhs. Long-term losses under the head capital gains. Assessment years 2 years back 3 lakhs. Unabsorbed depreciation is 12.5 lakhs. Both as per income tax records and the books of the accounts of the company. You are required to calculate the total income of XYZ Limited. Your answer should clearly indicate the reasons for the treatment of the individual items given above. Examine the applicability of 115 JB. My God, what a question. Friends, take your own time, go through the question, and let me tell you only for your information purpose that this is a past examination question. Oh my. Students would really scare when they look at a question like this in the examination condition. But exams are exams and take your own time, friends, and please let me relax. I'm not in the hurry to solve it. Not at all in the hurry to solve it. And this particular question was asking you, examine the obligations of the MAT. Oh my God, that means this question is all about your MAT calculations and all about your total income calculations. But it appears, the way the question is set, it appears that there is more focus on the total income part of it. Less focus on the MAT part of it. But anyway, concept is tested. 16 marks in the examination condition. I repeat, baby. 16 marks in examination condition. And look at the length and the breadth of the question. I mean, see, the same question, no? If you will see as per the font settings of the question paper, because they have little bit of extra line spacing. Roughly, if you see this particular question, I have got this particular question in almost one page. Almost one page. Okay. But in examination condition, this question will run into at least 3 to 4 pages. Because your question paper is first of all not in the A4 size format. That is first one. But this is my A4 size format of textbook setting. So there it is, I think one size smaller than A4 size. That is one thing. Second thing, their line spacing is little bit more than my line spacing. I think they are using 1.5 line spacing, but I am using only one line spacing. Plus their, what should I say, the page margins are also a little bit more because they do very flexible kind of formatting of question paper. So that it is very clearly visible and things don't get. They're very good way of doing that. But we normally, teachers can't do that, because if we do that, if our material is supposing 500 pages, it will go into around 2000 pages then. That kind of spacing we can't afford, actually. As students will really rock, when these kind of questions will come. And I have already given you good amount of practice also. See, I'll tell you one thing. The questions which I am solving, of course, you have that practice in the classwork, and you should also do the homework practice very well, friends. If you see my material, I'll just scroll it a little bit, wait for a while. For example, see, this question is a homework. That is also good length breadth. See, on the very next page. Maybe on the next page is another homework. That is also good length breadth. Smaller than the given question, but look at it like that. These are all your questions. This is your homework. Look at this length breadth. Almost how many adjustments? 8, 9 adjustments. So I have given you that good quality of homework also. It is not just that I am always focusing on good quality of the classwork, but I am already given you the good quality of the homework. The reason I am telling you that you should also practice. You should also practice on your own. And of course, all the homework solutions are already shared with the students. It's not that you are not given, you will be given the solutions. But when you yourself do it, no. I mean, see, what students should actually do is, when you actually do it, you come to know that up to what degree of question that you are able to answer it properly. Giving 100% right answer will be really good, but sometimes may not be achievable. Now, for example, this particular question only I am telling you, 100% correct answer is impossible to achieve. Achieve at the student's level. Even at the professional level, that means even if I go and sit for this kind of a question for the first time in examination condition, I may not get full marks. I am telling you. Because some of the points are only dicey, where I have to take one view, second view. Now that paper setter will take a different view, I'll take a different view. Then the matter is gone. So this kind of question, it is not just the question, but lot of notes, lot of theory points. Everything is lot. Take your own time, friends. Let me start. Step by step. Okay, come on. Come to this particular page, friends. Okay. First thing is, let me read what is that question is asking you. Come on, quickly. Calculate the total income. So I'll have to do that total income calculation. Your answer should clearly indicate the reasons. That means there are so many items and most of these items are backed by the case laws and the concepts and the courtroom discussions. That's the reason the question is saying that it should clearly indicate the reasons. Correct. That is very much correct. Examine the applicability of 115 JB also. Oh my. This statement is really bullish. That means I have to do 115 JB analysis of the situation also. Okay, so I have to do total income calculation, I have to do 115 JB calculation. At the same point in time, the question has not asked me that you do the tax liability calculation. See, clearly it is not worded that you do tax liability calculation. So you may take a call in the examination condition saying that no, I will not do tax liability calculation. I will do total income computation, I will do book profit calculation, but the tax liability working I will not do. You can take that particular view. And as such, in a question like that, it is not very much required to do tax liability because they have not asked you tax payable. Now, read the language of some of the previous questions that we have already solved. Comparative analysis of the questions. Okay. Now, let's check the previous question. This is in the homework category. Okay, but let us see what is it printing. I think it is just the previous page. Just scroll it. Compute the total income of the assessee and the tax liability. In this particular question, you will feel that whether I should do math or I should not do math. No, just the question analysis I am telling you. Should you do math or should you not do math? The answer is 100% you should do math because you can never get tax liability without math. If a question in a simple English tell you that do tax liability, you have to do math for the corporate assessee. You have to means you have to. You have no choice, sweetheart. You will have to do. Okay. So compute total income and the tax liability. So some students will think that no, I have not to do math because they have not printed a math. But that will be wrong because you cannot get tax liability without the math application because only after comparing the minimum alternate tax, you can get the tax liability. Very much true. Okay. Let me see the previous question. This was, yeah, I think this I have solved in my previous class, Netherlands Oil Corporation. Okay. What is the language of the question? You are requested to compute the total tax liability of the company. That is the language of the question. You are required to compute the total tax liability. This question is not even printed, you do total income or you do book profit, something like that. But they have just asked you that do the tax liability working. So you got to do everything because for a corporate assessee, you cannot get a tax liability without applying math. Keep that in mind. Okay. Let me see still some more question before, if at all. This question was, okay, let me read this question. What is it printing? You are required to examine the applicability of 115 JB. So students will clearly feel that, oh, 115 JB I have to do because printed in the question. And compute the book profit. Okay, so you will do that working. That is a part of 115 JB. And the tax credit to be carried forward. Assuming that the total income computed as per the provisions of the income taxes, this figure. Now, this particular question is not printed that you do tax liability calculation. So, students will wonder, oh, tax liability working should I do or should I not do? But answer is that you have to do. You have no choice because see what question has told that you have to find out the tax credit to be carried forward. How can you get the tax credit carried forward without calculating the tax liability? So that is the number which you have to give in your answer, that the amount of the tax credit to be carried forward in this question. So this is what I'm telling you, that in the question, it is important that you understand what the question is asking you, because you have to do what the question is asking you, and if you overdo, then it will be a time cost. See, we don't have that concept of negative ranking. Negative ranking for the finalist students, we don't have that kind of a situation. But in that case, logically it will be a negative ranking, because you will have an extraordinary time cost, because there is a time bound situation. You got to finish your affair in the examination condition in the time bound manner. Have you got this? Now come to the question that we are approaching. 1 second, let me scroll, friends. Yeah, this is my question ID number 14, which I'm approaching right now. Okay, so this is my question. Let me come back to this question. And what is this question asking me now? Calculate the total income of this company. Examine the applicability of 115 GB. Now, with this much of inputs, you may take the view that there is tax liability calculations are not required. And if you take that view, you are right. Unless somewhere inside in the question, if it is printed that you do that and you get some hint. So I've not gone to that level. Only to this last two sentences, what is printed in the question, you may not do tax liability calculation. Full stop. Okay. But for our classwork purpose, we will do it. So tax liability is not asked. But they have asked you total income and they have asked you 115 GB. And they have only asked you applicability of 115 GB. Rather, they have not even asked you that do computation of that. But applicability means you have to do computation only and you have to show. You cannot write the theory, applicable, not applicable. In the stories you can't write. So you better do computation and show it that this is how it is applicable. Finish. So this all adjustments we do and this all adjustments we not do. Finish. Okay. So any question as per my style of answering it and as per my style of attending it, I always like to do 115 GB first. Given a question where I have to do 115 GB and the total income, I will always give top priority in my classwork situation to 115 GB. The reason being that it is simpler. First of all, comparatively it is simpler. And two, the adjustments which you do in 115 GB gets repeated for total income. So basically, I have that clarity of mind. I mean, I've done 115 GB adjustment. Immediately, I can say that no, the same will be adjusted in total income also. For example, transfer to reserves. Transfer to reserves is not expenditure. So transfer to reserves get added in the MAT. It will also get added in my normal calculations. So that way I have that, the flow of understanding. And I think my mind is suited that way. I mean, I'm not telling you that do it like that only. If you are comfortable other way around, you can do it. There is no hard and fast rule, friends. Okay. So I'll open up my answer now. And by opening my answer, I will start with net profit, starting with 9 lakhs. Okay. So question ID number is 14. Calculation of book profits. Profit as per P&L, 9 lakhs. Add, less. There are not much of the adjustments as I apparently feel, so I have not left so much of space. Okay, add, less, adjustments. After doing that, I am going to get book profits. Tax liability calculation as such, they have not asked, but we will do it for our classwork purposes. So we will say book profit, the rate of tax and the tax amount, surcharge and the cess. This is how the structure of my answer will look like. Have a look, friends. I start my answer with the book profits, which is printed in the question. Then I do some add less adjustments. The spacing I might have to adjust because I'm not very sure, but I know that after the out of the question reading that there are not much of the book profit adjustments here. Then I'll get the book profits. Some people also call it as adjusted book profits, and then I'll have my rate table, my tax liability calculations. Okay. Now I'll have to go and analyze each and every point step by step from the MAT point of view, Okay. Now this is some leaves of old building and all that kind of things. This does not have any effect in the MAT. Now, only thing that you should remember in the MAT, of course, because in a question like this, it can become a material point, is that is this 9 lakhs, is this rupees 9 lakhs as per the compliance of the company law. That means if there was some debits which was absolutely in the violation of the accounting standards, or if there were any adjustments in the books of accounts which were absolutely against the accounting principles, those things you can catch it very quickly. But your accounting principles, as long as they are complied with and as long as they are followed properly, no need to touch the figure of 9 lakhs. So keep this basic point in your mind that you have started your answer with 9 lakhs on the assumption that this 9 lakhs is in compliance with the company law. Otherwise, if you don't believe this and if you don't, then you can't start your answer with only 9 lakhs, because first of all, you have to adjust the 9 lakhs. Okay, so doesn't require. Now, annual fee for technical services is already debited because all these items are debited, credited. So they are all debit credit as per books of accounts. So we're not going to analyze further. Is it a proper accounting debit credit? Yes, it is a proper accounting of debit credit. So skip that point. Now the company has collected from the customer GST some 3 years back, or you can say indirect tax 3 years back on the levy and all that. So that's the proper accounting they have done. Land development charges debited. Okay, it is already debited. Criminal case was filed against the director of the company and all that expenditure is debited. So okay, debited. Now here in this case, I'll tell you a doubt which normally I have. But that is only, what should I say, borderline doubt. So we don't focus that from the MAT point of view. Okay. Now, for example, just imagine, for example, okay, this is a land development charges. You have already debited to the P&L. This is actual fact printed in the question. Okay. But maybe I feel because I am a student, I feel that it should have been capitalized. So I feel that my debit is to P&L is not correct. I feel that. You can feel like that. For example, revenue capital expenditure. Any corporate who wants to suppress the book profits will like to write off everything. That means even capital expenditure they like to write off. Because when they write off in the books, they reduce the book profits. So these revenue capital doubts, let me tell you, these revenue capital doubts are always a dicey doubts. Dicey doubts in the sense that there are a lot of courtroom discussions, there are a lot of judgments, a lot of discussion with respect to accounting standards, proper accounting systems and all that. So these dicey doubts, don't disturb them in the book profits. That means don't adjust 9 lakh rupees for that. Don't adjust 9 lakh rupees for those kind of revenue capital doubts which 2% can take two different views. Adjust rupees 9 lakhs. That is your starting 9 lakh rupees. You can adjust it only when you are damn sure, damn sure that there is a clear violation of the accounting standards. So don't do, I'm telling you, don't do any silly adjustments to 9 lakhs in the MAT calculations. Don't you dare do that. Unless you are very sure. For example, if you do some adjustment, for example, then I will ask you, why have you done the adjustment? Then you'll say, sir, because of these, that, I'll say, open the book and show me. Open the book and show me. Which accounting standard violated? Show me. If you are capable of showing me, then do the adjustment. Otherwise, don't do it. Finish. Have you understood that? Have you understood that? So, this is one of the another key knowledge another key knowledge of the MAT chapter in the given question, that don't disturb book profits unless you are damn sure that the accounting standards, company law has been violated clearly. Keep that in mind. So company has issued some bonus shares and this amount paid to registered debited. So that's okay. The company paid 7,000 interest on deposit to non-resident buyer, advance debited. TDS compliance, not compliance, all these things doesn't come in the MAT. MAT is all about books. So next point, overdraft interest 40,000, company is unable to pay its income tax dues. It is a debit items. So as per the books, it is debit only. Because in the books you have asset liability, P&L. That's all you have. So that is a part of the P&L. So this is how you should accept it. The opening closing stocks of this particular year were undervalued by this much. Here I can have that doubt. But again, here I can also have the doubt that this can be the consistent practice of the company. So for this point, no. For this particular point, I can have a doubt whether my 9 lakh rupees is in compliance with the company law. I'm doing undervaluation of the stocks. Because even as per the accounting standards, inventory should be valued at cost market value, whichever is less. It's a generally accepted valuation system of the inventory. Cost market value, whichever, you cannot do undervaluation. So you are saying 90% respectively and were undervalued by 10%. There is no concept of undervaluation in the company law, inventory. But again, because I am a taxman, my accounting knowledge is not so strong. So I will advise you. I will say that, look, you are doing accounts class also, no? So you are doing accounting standards class also. Okay. So come on. Ask your accounting standards, sir. Come on. Speak to him. And you have to speak to him so clearly, because there cannot be so answers, because after all you are talking about tax liability. After all, every rupee adjustment you do, you are telling your client to pay money to the government. So if your client runs away, then your fees will also run away. Keep that in mind. So you got to balance the things very smartly. So you have to tell your account sir that, sir, is it correct as per accounting standards? My company has done undervaluation, and that undervaluation is printed in the question. It is printed in the question. Take the copy of the question and show it to the sir. Sir, come on, this is the adjustment. Is it correct as per accounting standards? I want to know that. And I want to have that clear-cut view. I don't want to have that so-so view. Double standards I don't want. I want only single standard. Sir, is this accordance with the company law, that means accounting standards, or it is beyond the company law? Sir has to answer it. Supposing if account sir says that, no, this is violation of accounting standard. This is not correct. Then you have to reverse it here to the 9 lakh rupees. Not in the MAT, but the profit as per P&L. So I have a doubt. I myself personally have a lot of doubt. But I'm still not going to do the adjustment because the institute has not done it. I have the doubts. I have 100% doubt about it. But if you see the suggested answers of the institute, they have not done this adjustment. And because they have not done it, I am not doing it. As simple as that. But I have already given you that concept. Okay. The next one. Some of the investments were held by the company, not as a stock in trade, that means investments, which had to be depreciated by 4.8 lakhs due to directives from the government. That is a reduction in the value of the asset. Provision for the diminution in the value of the asset. This adjustment is clearly there in our MAT provisions. See, not as a stock in trade. That means it is as a investment. Come and catch up this particular point. 1 second. Let me erase this, friends. It is in the add category, I believe. 1 second. 1 second, friends. Let me erase it. Okay. Amount set aside for the diminution in the value of the assets. Diminution in the value of the assets. Okay. So, if there is any reduction in the value of the asset, as a provision you have made it. So, provision for the reduction in the value of the asset. Now, come to the question. Not as a stock in trade, that means as a investments, naturally. And it was to be depreciated, that is a depreciation of the investment, that is a reduction in the value. As per the government directives. So, that is a clear-cut situation of a provision. So, reduction in the value of the asset, provision for the diminution in the value of the asset. This adjustment is to be done in the MAT. So, that we will do it. So, this is already debited. So, I am going to add it back. Okay. Thereafter, sale price of the land held as a stock in trade. Agreement for the sale of the land is executed on 21st of March. Stamp duty value is this figure. So, that is also purely the part of our tax calculations. And the balance on the 1st April profit and loss was to the debit of 2 lakh. This is also a very important point. But before that, let me open up my answer. Before I can discuss that point. Oh, I have already opened up my answer. Okay. Add. Provision for diminution in the value of asset. 4,80,000. Okay. The balance as on the 1st April, profit and loss, it is a balance as on the 1st April. So, 1st April is basically our opening balance. Okay. To the profit and loss. So, what do you mean by profit and loss account? Opening balance was a debit of 2 lakhs. It means what? It is a brought forward loss of 2 lakhs. It is a brought forward loss of 2 lakhs. So, that brings me to the adjustment of carry forward and set off of the book losses, where the concept of the MAT is loss or depreciation, whichever is less. Okay. So, I am going to get confused now. I am going to get confused. Now, the company had the following claims of the brought forward from the prior years. Business loss relating to assessment year 12 years back, assessment year 3 years back, long-term loss under the head capital gains, unabsorbed depreciation as per income tax records and as per the books of accounts of the company. So, loss figure is 2 lakhs and the brought forward depreciation is 12.5 lakhs because it is for the income tax purpose and it is also for the purpose of books of accounts of the company. Is that okay? Now, I am again a little bit confused this thing that say for example, I am having this particular figure brought forward depreciation separately 12.5 and brought forward losses as P&L appropriation opening balance rupees 2 lakhs. So, is this breakup arrived at correctly? In other words, see in your books of accounts, you also have a fixed asset schedule. No, you already have a fixed assets schedule. Okay, you already have that. Okay. So, you can derive that particular number. That means this 12.5 as per books of accounts from the asset schedule. You can calculate, you can go back to the previous years and earlier years, preceding years, and you can get that number of 12.5 lakhs. But ultimately, your P&L appropriation, which is opening balance, is only 2 lakhs. So, Will that be correct accounting? I mean, I'm not very much sure about it. Or should that not be the case? Should that not be the case that the opening P&L appropriation by itself should be 14.5, and of that the breakup should be 2 and 12.5 separately? See, for example, just imagine this example. Year by year, normally you are preparing fixed asset schedule. Then you are calculating depreciation. So that depreciation you write off to the profit and loss, the respective years. This is your P&L. Every year depreciation you write off, which comes from the fixed asset schedule. Thereafter, if there is any loss, suppose if there is any loss, okay, so my P&L appropriation account logically should include the depreciation, isn't it? Year by year. I'm not so sure now. Why is profit and loss opening balance is only 2 lakhs and 12.5 separately given to me as a brought forward depreciation? So I'm a bit confused. So again, you required a little bit of accounting knowledge for the MAT, because MAT is all about books of accounts in compliance with the company law. So I'm not going into those now technical details because I'm not good in accounts. I'm not supposed to be so good in accounts. I'm a tax man. So what I will do, I will just follow what is printed in the question. But sometimes some smart, intelligent people can really question it. That how is this possible that profit and loss opening balance is only 2 lakhs, but that doesn't include depreciation of the earlier years? That should include, no? Because see, in the books of accounts, for unabsorbed depreciation, which is brought forward, this is 12.5 lakhs, which is actually a brought forward figure. It is in which ledger? Because after all, it has to be in the ledger. No, somewhere it has to be in that ledger account, right? So that you got to find out. Okay. So I will just go, because it is printed in the question, brought forward book loss, depreciation, whichever is less. So I will do that adjustment, and I'll pack up with my almost the MAT discussion. Okay. So this is my brought forward losses. Loss or depreciation, whichever is less. The loss is 2 lakhs. Depreciation is 12.5 lakhs. This is given. This is P&L appropriation opening balance given. It is already printed in the question. Whichever is less. So I'm going to less 2 lakhs. That's all for the MAT point of view. So this is our book profits. And with the book profits, now you can multiply your rates. Rate card I have already shared with you, friends. So now use your rate card. Do the multiplication, friends. Surcharge is applicable only if your total income exceeds the limit, because surcharge calculation as per the style of the government is defined. So you got to follow that definition of the surcharge. Okay. So if your surcharge is applicable on merits, apply it. Otherwise, forget it. This is an Indian company, and anyway, in the MAT, there is no question of any difference between Indian company, foreign company so far. Okay, so if there is a difference in MAT rate for different types of state, then apply it. I mean, I'm not trying to say that always go like that. Follow the rate card. That's all I'm trying to tell you. Okay, so follow the rate card and update your answer. So far, so good, friends. So this is your MAT calculations. Okay. Let us go to the tax liability calculation now. Same to same question. Opening 9 lakhs. then all the adjustments from the tax law point of view. So let me open up my answer and thereafter we'll do each and every adjustments. Computation of total income. Profit as per P&L. 9 lakhs. Add less adjustments. Okay. You have all the items A, B, C, D. So we'll keep on adjusting A, B, C, D step by step. I'm not doing any, full look of the answer right now because I don't know how much space I will require. So I don't know when I will have to take the total of that heads of income and all that kind of things. I'm not daring to do that because I myself is not so sure. So get it and come each and every item step by step. Okay. You have about A, B, C, D, E, F, G, H, I, J, K. Up to K you have, and then you have that carry forward set off and all those adjustments. This is our final look of the question. Point number 1. The company had taken on lease an old building for the purpose of locating its business. Due to the old age of the building, it was demolished and the new building was put up, which was used for the purpose of XYZ's business from the September of the previous year. The cost of the new building is 10 lakhs. This is 10 lakhs. Written off as a revenue expenditure. And lesser permitted a company to have the extension of the lease by the another 20 years. Very good point and lot of courtroom discussion. Ultimately, this is the cost of this particular new building. This is the cost of this particular new building, which is ultimately written off. But what is the real, what should I say, a good point about this particular fact is that you are not the owner of the building. You are a lessee. You are not owning this particular asset. And that is one of the reason, logically you could not do the capex. See, we say, no, you have to go to capitalize this. For example, if you were the owner of this particular building and you have done the improvement to the building, you would have straight away done the capex. But in the given situation, you could not do because you are not the owner. Lot of different views exist on this kind of a situation where you are not the owner of the asset and you improve the asset. And this concept can be extended to any type of the asset. Building is one of the best example in the real life. For example, you can have any asset of which you are the lessee and you do improvement to the asset. Why? Because you are actually the user of the asset. You are not the owner, but you are the user. So to your advantage, you need to do the improvement. You are doing the improvement. Lot of different views exist on this particular front. Somebody will say it's a pure revenue expenditure, so just write it off. Somebody will say it's a capital expenditure because after all it is an improvement to the building. You can't write it off, so you got to do the capex. Somebody will say that no, you are going to do the capex, but again after doing the capex, whether you will get depreciation on that, not get depreciation on that, because for the depreciation purpose also you should be the owner of the asset. You should be the user of the asset. At the same point in time, in the depreciation provision, there is also a concept of a deemed owner. There is also a concept of a deemed building. If you read the provisions of section 32 very clearly, read with section 30, 31 provisions. So 30, 31, 32, these three sections of the business income chapter, if you read it very precisely, such expenditure can also be regarded as a deemed building. That means actually it is not owned by the assessee, but we call it it's a deemed building and you get a depreciation. You capex also, you get a depreciation also from the tax law point of view. In the books, you may do whatever you want. So we got to write all these views and then you got to follow one. Okay. So come on, start with the answer quickly. Point number A, different views. Okay. View number 1. The expense is purely revenue in nature since assessee is not the owner of the building. View number 2. The expense is capital in nature since it has brought into existence a capital asset into bracket building, although not owned by the assessee. I repeat, expense is capital in nature since it has brought into existence a capital asset, that is building, although not owned by the assessee. So if you go with the view that it is a capital expenditure, then you have to add it back to the income. Okay. View number 3. Explanation to section 32. Expense on building the expense on building, which is capital and not owned by the assessee, is a deemed building it is a deemed building and thus for the tax purposes it should be added to the block of asset and depreciation is allowed. And the depreciation is allowed. The most important point here is that you got to write all the 3 views very properly. Then you got to decide and follow. Many times the university and the institutes follow view number 2, but it is advisable that we may follow view number 3. Okay. So come on. Now come to this particular point. Building was put up, used for the purpose of business somewhere in the September of the previous year, because that test of number of days use. Somewhere in the September it is put. So if it is used for 180 days or more, then you get full rate of depreciation or you get a half rate of depreciation. So for tax law purposes, full rate and half rate can also matter, and that is the reason this September of the previous year printed. That means roughly if you see October, November, December, January, February, March, 6 months. So 180 number of days test is satisfied, and therefore it will be eligible for the full rate of depreciation. Have you understood that? And so if you are following view number 3, and I think it is very much advisable to follow view number 3, but institutes follow view number 2, some universities follow view number 2. So let me suggest that sometimes view number 3 is also very well adapted without any problems. If you want, you can follow view number 2, but write all the views and follow whichever. View number 2 also, if you say that, okay, I followed view number 2, that means I will say that it is capital expenditure, so I will disallow, but I will not give depreciation. In view number 3, you will disallow the expenditure, plus you will give the depreciation. So I am following view number 3. Okay, so in the view number 3, you have to add rupees 10 lakhs because it is a capital expenditure, and you have to give a depreciation on that. So 1 lakh rupees will be deducted on account of depreciation. And I can also write a note, put to use in September. And thus full rate of depreciation, because income tax depreciation is full rate or half rate. Come to the next point. ₹1 lakh was paid as an annual fee for the technical services to a foreign collaborator under agreement approved by the government. This is an annual fee for the technical services. You know, there is something as a royalty technical fees. Keep that in mind. Royalty technical fees. And this royalty technical fees sometimes becomes always confusing, because if there is a royalty technical fees which is directly in connection with the asset installation. But here, nothing of that sort of extra data is printed in the question. It simply says ₹1 lakh is an annual fee. Annual fee is basically something like your maintenance charges. But confusion was created by the question just by using the word technical services, because technical services has a separate definition altogether for the tax law purposes. But because the word which is used in the question is annual fees, so we'll call it as it's a expense type category. So there is no question of any adjustment, and no question of any adjustment to the income. Okay, so point number B, annual fee for technical services is a revenue expense. So no question of any adjustment required, because all these items are already debited, credited to the P&L. If you want, you can already write here already debited. Okay. Next point. The company has collected 3 lakhs from its customers by way of GST 3 years back and had remitted it to the state government due in time. So you already paid this. Okay. You have already paid this. So logical understanding of whenever you pay these indirect taxes to the government, that means it is allowed as a deduction as per section 43B, cess duty tax allowed as a deduction upon the payment basis. Okay, so it is already done. But that has happened some few years back, the history. On the levy being challenged in the High Court, so now there is a challenge in the High Court. The court held that collection is illegal. That means High Court has already decided in the favor of the taxpayer, said that collection was illegal, and the state government has already refunded the amount back to the company. Correct? So, I am a company XYZ. I collected, then I paid. So, first I collected from the customer, then I paid to the state government. And then I challenged it. I said that this is not valid by the law, and so you have to refund it. I've already won the case and I've got a refund back. This is the situation. Only thing what is not given to us in the question that now whether this challenge is pending in the Supreme Court or not. In other words, the point here is whether this rupees 3 lakhs, which is now received by the company, is it an income of the assessee? That's a question. Put it differently. Is it accrued to the company? It's a question. Again, put it differently. It is possible that this challenge is pending in the Supreme Court, but still the same question. Is it accrued to the assessee? That means, is it my income? Have you understood that? Okay. Particularly with respect to indirect taxes. I repeat, friends, particularly with respect to the indirect taxes, let me tell you, there are type of transactions, but how does the revenue recognition, taxation, accrual, general view, because there are many different kind of, judgments. So let me summarize variety of judgments and give you the entire overview, and then I will give the answer. Okay. So first of all, this point number C. Point number C. Okay. Indirect tax example, first of all, GST collected from the customer. This is a flow of transaction. Collected from customer. Then pay to the government. Thereafter, you can get the refund. Okay. This refund can be as per the judgment of the High Court pending the Supreme Court, or it can be from the Supreme Court also. So there are two stages of refund also possible. That High Court has decided in your favor, you get the refund, but still the matter go pending in the Supreme Court, and yet the Supreme Court has to decide. So you get refund as per the judgment of the High Court, but pending in the Supreme Court. So does it accrue or not? That's the situation. Or you get as per the judgment of the Supreme Court, whether it is accrued to the assessee or not. Okay. And there is a chance that it was after getting the money from the GST department, you might refund it back to the customer. Because originally the money was collected from the customer. So indirect tax law is always like that. So there is a chance that you get from the state government and then again you give it back to the customer. There is a chance. I mean, a very rare chance. Okay. So understand the entire flow of all the transactions, variety of judgments in summary, and thereafter I'll come back to the question. So whenever GST is collected from the customer, it is income of the assessee. Always keep that in mind. For example, if you are doing sales plus GST. So GST first of all is your income. Always. No matter how you accounted in the books, inclusive method, exclusive method, whatever. GST, indirect tax, forget about the word GST. Any indirect tax collected is always your income first of all. But then you collect, so you have to pay also to the government. So when you pay, you get an expense deduction, but it is subject to the condition of section 43B. Section 43B says that you get the deduction upon the payment basis. So you collect it from the customer and next month you have to pay to the government. You have paid it, so you get a deduction. So things get squared off. That means you don't have kind of a tax burden on that. So very routine kind of transaction. Collect from customer, show it as your income, and when you pay to the government, take it as a deduction. Okay. Now if you get the refund as per the High Court directive, it is already accrued as income of the taxpayer, even if it is pending in the Supreme Court. So High Court's order, you got to follow. So High Court decided in your favor. So it is once again your income accrued. Even pending, even it may be pending in the Supreme Court. Okay. Then the Supreme Court again may reverse or Supreme Court may confirm. So again, if the Supreme Court reverse, then it will become your expense. Or Supreme Court confirms, again it is already accrued at the High Court level itself. So thereafter, whatever the Supreme Court says, you have to follow. If Supreme Court says that no, I want to reverse the judgment of the High Court, so you have to give it back to the government. So it will become expense again. The Supreme Court confirms, confirm. It is anyway brought to tax. Okay. Thereafter, if you refund it back to the customer, it is again your expense. This is a summary of variety of judgments. Variety of judgments. And this can be applied to every indirect tax laws, friends. It is not just about GST, it's about each and every indirect tax law. Is that okay, baby? Come on. Now let's come and read the question. The company has already collected 3 lakhs some years back. On levy being challenged in the High Court, the court held the collection is illegal and the state government has refunded the amount to the company. So this refund is already the income of the taxpayer. And this income is also covered under Section 41 of the Income Tax Act. And that detailed discussion I have already done it in the business income. So let us update the answer. Refund of GST is the income. Okay. So you do not require any adjustment because it is already credited to the P&L. Is already credited to the P&L. So it is anyway the income and it is already credited to the P&L. So no further adjustments are required. Okay. Next point. Land development charges 1.5 lakhs were paid to the State Industrial Development Corporation on the allotment of a commercial plot. We call it the land development charges. Land development charges for the allotment of a commercial plot. Is it a capital expenditure or is it a revenue expenditure? Can I say that these 1.5 lakhs is directly linked with the improvement of the character of the plot of land? So this particular plot of land has been allotted to you, and for the allotment you have been paying 1.5 lakh rupees lump sum to the State Industrial Development Corporation. So can I say, I repeat, can I say that this particular money of 1.5 lakhs is a capital expenditure? And let me tell you, this land development charges for a commercial plot, particularly for the commercial plots, that is your capital expense. So this is not a revenue item and therefore it will be added. Land development charges is a capital expenditure. So you have to add 1,50,000 rupees. Point number E. A criminal case was filed against the director of a company. This is also a very good number of judgments. A criminal case was filed against the director of the company in the official capacity. Director in the official capacity, but the case is criminal. The company spent legal expense of 50,000 defending him, and the director was acquitted of the charges at the end. There are many situations in the real life world, friends, and there are many court cases on this particular front. Let me tell you those realistic situations that whenever the things get disputed matter, and thereafter, in case of a company, the responsible people are all directors. So when the director is being charged with something, then the company has to defend the directors, and companies spend a lot of legal fees and the legal expenses. So can I say that these legal expenses are for the business purposes? One more catch which is there in this particular point as a matter of question is that the director was acquitted of the charges at the end. But this statement is little bit superficial, because you will never know at the end. See, given question is printed at the end, but as per our, legal system in our country, years and years it takes to decide the criminal case. It goes on for years and years. So you might have spent this particular money in the previous year, and this acquitted at the end, this data you will never know in the real life. It is printed in the question, so I will read it. It is printed in the question, so I will read it. I will accept it. But in the real life, you will never know what is going to happen in the end, because this legal system goes on and on and on. First year expense, second year expense, third year expense, fourth year expense, fifth year expense, 6, 7, 8, 9, 10, 11, 12, 13 year. In the 14th year, you will come to know. Say, for example, what happened at the end. So our income tax concept says like that. That what happens at the end is not so important, and is not relevant for decision making only. What is very important is whether it was in his official capacity or in his personal capacity. Because disputes are disputes. Legal matters are all legal matters. So you have to see whether it was in the course of the business or it was outside the course of the business. That means what kind of a legal matter it was. Every criminal suit, let me tell you friends, every criminal suit is always on a person. It is never on an artificial person. Let me tell you that. For example, if there is a robbery case, a robbery case can never be on a corporate. It can never be on the corporate. A company can never do robbery. By and large, I am just telling you. Few of the corporate offenses, for that the corporate criminal things are there. But even then, in the criminal court, the persons acquitted are the real persons only. For example, you may say that there is XYZ scam and all that. This company has done, that company has done, and whatever. But ultimately, behind the company are all the individuals. They are the real brain who do all these damn things. So in the criminal court, the ultimate thing will always be on the person. But what is important for us to see and observe is that whether it was in the official capacity or a pure personal capacity. You understood that? So the income tax concept says, criminal case, this is not a relevant criteria. Whether it was civil or criminal, doesn't matter. Director of a company, so he is person of the company. What is important is a official capacity. Okay, and what happens at the end was acquitted at the end. This is also not a relevant data to take the decision. This is income tax concept. So if you are sitting in front of the income tax officer, he will just see the point that whether it was a pure personal matter, for example, or it was a pure official matter. Official matter, legal expense allowed. Personal matter, legal expense not allowed. Example, if the director is getting divorced from his wife, for example, and there is a legal expense, that is pure personal. Is that clear? So, take down the answer, point number E. Legal expense to defend the director in the official capacity, business purpose is a allowable expense. Okay. It is already debited. Civil or criminal is not relevant. Judgment at the end is also not relevant. And so you are not required to do any adjustments because it is already allowable expenditure and it is already debited to the P&L. Point number F. The company has issued in the year the bonus shares to its shareholders, and for that purpose fee of rupees 1.5 lakhs were paid to the registrar of the companies. These have been written off in the accounts as a revenue expenditure. Also very, what should I say, a popular kind of a situation and a lot of variety of judgments. Company has issued bonus shares. Okay, let me tell you those judgments first. Point number F. There are many judgments on this front. Let me make a general comment first and thereafter we'll do specific discussion. Okay. Share issue expenditure. Debenture issue expense. They are all Supreme Court judgments, friends. Very standard kind of share issue expenditure and the debenture issue expenditure, most popular judgment of the Supreme Court. In case of Brookbond India, but let's forget it. But Supreme Court was required to answer what is the nature of this expenditure when it is share issue expenditure and the debenture issue expenditure. That means expenditure to raise funds and expenditure to raise equity. Okay. Very landmark judgment of the Supreme Court, and Supreme Court has said that the test of capital is to be applied here. I repeat, the test of capital. See, when a company raises equity, it is a permanent capital that the company gets in a going concern system. That means you have never to repay this money. You really enjoy this capital, but for the business purposes. So, the test of capital, that you are going to enjoy the capital, you are going to enjoy the money for business purposes. So, it is always capital in nature. But if it is a debenture issue expenditure, you are again going to enjoy the money, but you have to repay the money. It is a repayable funds. So, you don't enjoy the money. Actually, you are paying interest on it, getting a debt on that. So, this particular money is but for the business purpose. It is but for the business purpose, and the test of capital, I repeat, the test of capital. Do you get infinite life for the capital? No, because this is repayable. So this money being repayable, there is no advantage in terms of capital. There is no advantage in case of a debenture issue in terms of the capital, and therefore it is always revenue in nature. Very landmark and very fundamental kind of judgments. Okay. After this, many people follow this concept. What about there is a bonus issue expenses? What if there is a convertible debenture issue expenses? Then what is a partly convertible debenture? Then the people of course followed. Then there are many judgments which followed, like what if you got some finance and you got expenditure of financing? That means you are not a corporate body, but you are a non-corporate, but it is a financing expenditure. We are not talking about interest on capital borrowed. That is again a separate transaction. We are only talking about expenditure to raise the funds. And the nature of that is either equity or a debt. Okay. Now for bonus issue, the courts have said like that. It is also Supreme Court judgment. Okay. You will feel that it's a bonus issue, but it's a capital. That we will feel. But actually company does not get the advantage, because the test of capital says that you got to get some money for the purpose of advantage, but it is only capitalization of reserves. So it will be treated like a revenue expenditure, because there is no advantage. Advantage in terms of money, there is no advantage. When it comes to the convertible debentures, courts have again taken different divergent views. But the most popular view, they have also called it as a deferred revenue expenditure. Some courts have also taken the view that convertible debenture. So today it is debenture. So today you are issuing debenture. So it will be like a revenue expenditure. So here different views exist for convertible debentures. You can also call it as a revenue, because today it is debentures. So some people also take the view that today it is debenture, so it is like a debenture issue. Then in the year of conversion, when we will have that expenditure, that time we will say it is capital. So different views can be taken depending on the situation. Okay, so look at this particular question now. The question says company issued a bonus shares of 1.5 lakhs. So bonus issue is like a revenue expenditure as per the court cases, and therefore it is allowable. Bonus issue expense is a revenue expense. No adjustment required. It is already debited. This amount is already debited to the P&L. So you don't need any adjustment. It is a liable expenditure. G. The company has paid rupees 70,000 as interest on deposit to some of the non-resident buyers on advance from them. No tax at source was deducted on the payment. TDS compliance is not done. So straight away we are going to add it back. TDS compliance out of the payment to the non-resident. Overdraft interest of rupees 40,000 was paid to the company's bank, enable company to pay its income tax dues. This is also a very valuable thing. We call it a nexus theory. We call it as a nexus theory. See what is the nexus here? That this overdraft has got a direct nexus with the income tax dues. Income tax is not a allowable expenditure. And there I always said, and I also discussed in my earlier lectures, that this nexus theory makes a big difference. But in the given question, there is a direct nexus between the overdraft as printed in the question, and this overdraft is used for the tax payments. So tax payments are always the personal payments. So it is like a personal expense. So you do not get that particular deduction. GNH. Okay. Point number G, TDS non-compliance. Out of the payment to non-residents, you have to add 70,000. H, overdraft for income tax payments on that interest, 40,000 add. Nexus theory. Funds directly related to the tax payments. This nexus theory is very important. Supposing that one-to-one nexus was not established. For example, it was common funds, and from the common funds you are paying income tax. Then you don't have to do this kind of adjustments. These adjustments are done because there is a direct nexus printed in the question, and so we are following it that way. GHI. Come on. The opening and the closing stocks. So naturally it's just a stock adjustments, but 10% on cost. It was undervalued at 10% on cost. So this is already undervalued. So supposing if it is 100, then undervaluation 10. Okay, so this is 90. So this is 10%. So if this 90 is 90,000, so what should be the value? Okay, so this 90,000 will become 1 lakh. So there is an undervaluation to the extent of 10,000. And instead of 1 lakh 17,000, when you will do this, I think 1 lakh 30,000 and 13,000 rupees will become undervaluation. Okay. If it is undervaluation of the opening stock, it will be an expenditure. And if it is an undervaluation of the closing stock, then it is going to be the income. So opening, closing stock both. Stock valuation. Opening stock and the closing stock, the correct valuation numbers. Closing stock undervaluation, I will make it good. So this is going to be the income. Income is 13,000 rupees. That means the difference of valuation. And for the opening stock, whatever undervaluation is done is going to be the expense. So undervaluation of opening stock, that is your expenditure. So you have to reduce 10,000. And undervaluation of closing stock, you have to increase the profits by 13,000 rupees. Because my question, I have started with profit as per P&L. So I have to increase the income by the closing stock figure and decrease the income by the opening stock figure. Okay. J. Some investments, there was writing off of that particular investments, it is again the depreciation of the investment. That means reduction in the value of the investments. Is it an expenditure in the normal provisions? Now this is not expenditure item. This is like a capital loss, because this is directly linked with your capital asset, capital investments. So this is not your revenue expenditure item, but you have already debited to the P&L, because all these items are already debited. Look at the title of this particular question. The title is after debiting and crediting. So this is already debited, so I have to add it back. Okay, and this I will do. The sale price of the land held as a stock in trade, 10 lakh rupees. Agreement for the sale is executed on 21st of March and the stamp duty is paid at the rate of 5%. Okay, so why is this given 5%? So I want the stamp duty value first of all. So 5% stamp duty which is paid by the buyer. So 60,000. So 1 second. If a 5% is 60,000, okay. So what will be the 100%? That means what will be the value of the property? I can do the cross multiplication and get the answer. This is going to be 12 lakhs. Okay, and it is held as a stock in trade. So section 43 CA will come into picture, that if it is held as your stock in trade, that means are immovable properties, then stamp duty value will be tested. So your actual sale price is 10 lakhs, but your stamp duty value is, oh my god, 12 lakhs. So you have done 2 lakh rupees undervaluation, so I'm going to tax that money. Okay, and plus there is a tolerance level of the stamp duty value. I will tell you that, but although in my previous class, I guess I've already discussed that, but again, I have the opportunity, I will tell you. Okay, so J and K. Okay, let me make a note. J. Capital investments diminution in the value is a capital expense. 4,80,000 is already debited. So I have to add it. JK. Sale of land, stock in trade, actual selling price, and the stamp duty value. Actual selling price is 10 lakhs. Stamp duty value will be 12 lakhs. How did I get the 12 lakhs? 60,000 divided by 5 into 100. Because at the rate of 5%, the stamp duty was 60,000 rupees. Okay, at the rate of 5%, it was 60,000 rupees. So what would have been the value of the property? Value of the property will be full 100% value, and that is going to be 12 lakhs. Okay, the stamp duty tolerance level, stamp duty value, it is more than 105% of the actual transaction value. The actual transaction value is 10 lakhs. So is your stamp duty value more than 105%? That is a 10 lakh 50,000 rupees. Is it more? So government has got a concept of stamp duty tolerance level. We also call it as a marginal relief. That means if the difference between actual and the stamp duty value would have been less than the 5%, so the marginal thing, then we would not take the stamp duty value. We will not bring it to taxation. But in the given case, your stamp duty value is beyond the tolerance level of the government. That's a law basically, and it is more than 105, and that means 5% differential level. It is difference between the value is more than the 5%. So stamp duty value will be taken into consideration, and your 43CA income will be the difference, that is your 2 lakh of rupees. So this difference is 2 lakhs. So basically the government is trying to say by the provisions of the law that there is an undervaluation done by the taxpayer, and that undervaluation is caught, and there is not a marginal undervaluation, there is significant undervaluation. So up to 5%, government says okay, we'll be happy. But your case it is beyond that, so we are not happy, we are going to add it. Is that clear? Okay. Further, so we have done this, Okay. Now balance of profit and loss, that was purely because of that MAT adjustment, so that we have already understood, and there got no effect when it comes to your this thing. The company had the following claims of a brought forward from the previous years. Okay. So assessment year 12 years back business loss will not be eligible because it is beyond the specified number of years for the purpose of carry forward set off, so that will go away. Assessment year 3 years back, so these will be considered. Long-term capital loss, this can be adjusted only against long-term capital gains. A long-term loss can be adjusted only against the long-term capital gains, but in the given question there is nothing like that printed in the question. Is there any long-term capital gains you can find out? So there will not be any, actually it is permissible adjustment, but we don't have such long-term capital gains, so we'll have to be quiet. Rather it will be carried forward to the subsequent years. And unabsorbed depreciation, any number of years is allowed, and that is already as per the income tax records. And this is assessment years 3 years back. So all these figures that we are accepting that it is for the tax law purposes. So we are assuming that if you at all you want, this is all as per income tax. This is all as per income tax. So 8 lakhs will not come into calculation because the time has lapsed. It has expired loss. 4 lakhs, yes. 2 lakhs long-term capital gains we don't have, so we cannot set it off. And unabsorbed depreciation we got to consider. Okay. So come. So start using your calculator, darling. So this is going to be a total. Brought forward losses, business loss, 12 years old, business loss 3 years old, brought forward depreciation. So 3 years back was about 4 lakhs. Depreciation is 12,50,000. 4 years old, 12 years old, any amount is gone. Capital loss, it is already printed long term, so you cannot do any adjustment. There is no qualifying income in the current year, so nothing is there. Let me just check. I just forgotten, friends. Let me check. Is this long term printed? Long term losses have been printed. So long term loss can match only against the long term incomes. So that is gone. Okay. So this is a total. Okay. And in the total, you are going to have, just use your calculator. Come on quickly. And after the total, we'll do the tax liability calculation. So we'll make that small little table. Okay. So you'll have a total income, rate, tax amount, tax, surcharge, and the cess. Okay. Now we are left with maximum of the calculator work. Let me use my calculator, friends. Come on. Let's check whether anything that I have missed out. And it's your duty, friends. I'm giving you some time. Check it whether I have done any mistake. I have skipped any point. Come on, catch me quickly. So, 1 second. Okay. Started with 9 lakhs. So this is my 27 lakhs 43,000. Okay, check up minus 10 lakhs 93,000. So my total income is 10 lakhs 93,000. Come on, friends. Check up your total. Have a full look of the answer. Come on. The final look of the answer quickly. And start doing your tax liability calculation. Check up all the totals. Multiply with the rates of the company. In the given case, check out Indian company, foreign company, because here there can be different variety of the rates of tax. Surcharge. Surcharge will be applicable only when your income exceeds some basic limit, which is specified for the purpose of surcharge. So I always say that surcharge will be levied on merits, multiply with the rate of cess, and you are going to get this particular tax liability. Check all the totals, friends. All the notes and everything should be updated properly. This is like a 16-mark examination question, high value, and you should have the target. Clarity in the answer is very important. Update your table. Once you have calculated this tax liability, then you have to compare it with the tax liability under MAT provisions to arrive at the decision of net tax liability. That statement is a must. However, friends, in the given question, they did not ask the tax liability calculation, but I have done it just for the classwork purposes so that you guys also enjoy. I also enjoy. Oh my. Mamma mia. All right. Come on, check it, everything. Let me go back to the question and see whether I have missed out something, anything that I have. I think I've already considered. There's nothing greater input in the last two sentences. They're only asking you like examine the applicability of 115 JB and all that. So that's all.